Ladies and gentlemen, Keiki here. Welcome to the weekly update. Hope you guys had a good day trading yesterday. Market is down about 0.8% there. On the S&P Nasdaq 1.5%, semiconductor 2.7%. Dow held a little better. Russell 2000 1.6% negative. Transport pretty much flat there. Banks got hit 2%. Energy is making a move here, 3% positive on a red day like Friday. Looks like biotech is down. Healthcare is up though. Home builders down 1.5%. Utilities up 2.2%. We got retail down 2%. Emerging market 2%. Bitcoin down 7%. Gold, silver miners making a move on Friday. You can see 1.9, 1.5, and 4% for the miners. Dollar up, oil up, treasury bond up. VIX popped. Let's stick with the S&P 500 ETF. Spider. But for this weekly update presentation, we're also going to add gold and Bitcoin. It is all coming up right now. So what I want to do is that, we're going to flip back. We're not looking at 65-minute chart anymore. We're looking at daily chart. We're going to flip back to the daily chart. And we kind of want to look at the overall picture, right? We've been looking at a 65-minute chart. We've been analyzing them every single day this week. But for this, weekly update, which I do every single week on the weekends, we're going to look at daily chart. We're going to look at a kind of an overall bigger picture where the market is, going into, kind of prepare you guys what we can potentially expect going into this next coming week. So it looks like S&P 500 here. So what happened was, this is what is known as a head and shoulder formation. This is left shoulder, head, right shoulder, right? This is a well-known prominent pattern. And this is what is known as a neckline, right? You can see that neckline, right? So what happens is, if you kind of follow this kind of a textbook pattern, this is what is known as the broken neckline, right? Because what happened was, you can see we actually gapped down. This is where we closed that day, and we saw a 2%, a gap down. We gapped down right here. All the stops were taken out. Massive fear in the market. Guess what happened though? Look at that big, giant Marubozu candle there. Remember, what is Marubozu, okay? Well, it's a Japanese terminology basically saying that there's no, it's a shaved top and bottom, and it's in a long, big candle, right? So it's a strong candle. And with that, and it's also kind of like a counterattack candle, because we initially gapped down and then it closed above 50% of the previous day's candle, right? You can see that's kind of thrusting above that. Here, let me zoom in. Do a little bit of a candlestick analysis today. So this is a counterattack candlestick pattern. Basically, we gap down, right? It goes up and close above 50% or higher or more of the previous day's candle. So you can see that's previous day's candle, and it looks like that's the 50%, right? And we close above it. So there's that kind of that counterattack bullish reversal candle there. And then we did see that follow through on the second day. You see that right there? And that's also another shaved top there, follow through. And then it like gapped down third day, and then we kind of chop. And then on Thursday, we gapped up, faded, and then we gapped down on Friday. So basically, it's been consolidating ever since that counterattack Marubozu candle, right? And you might be asking, well, what does that mean? Here's what I want to say. So looking at this candle right here, as long as you know what I'm going to do? I'm going to put this down right here. As long as if bulls can stay up and keep at least a 50% of this Marubozu counterattack candle, we want to assume that counterattack Marubozu candle is valid. it still has its presence. It can still play out. So what the bulls need to do to make sure protect at least 50% of it, right? If we can do that, there's a good chance bulls can at least bring it up to about 460 or so, right? But right now, the problem is overall, trend is concerned. We're dealing with lower highs and lower lows. You see what I'm saying? Lower highs and lower lows. You see? And again, keep in mind, this is a daily chart. We're not looking at 65 anymore. And my short-term and mid-term moving averages are declining, right? So the pressure is forced by the bears. And bulls are getting pressured by the bears. But only thing right now, what I can see is that you see that long-term moving average. You see that pink moving average right here. You can see how that pink long-term moving average acted as support right here. And this was a crucial level. This was back in COVID lows or near the lows right here. This was back in April and June when people are calling for the Great Depression 2.0. You guys remember that? And you see how that long-term moving average, my pink moving average, it kind of played that crucial role. Resistance, support, and this was that, pre-election week, and that became the bottom before this market just went cycle to the upside, completely demolishing the bears. And that everything commenced after retest of that primary term, long-term moving average, that pink moving average there. So we have to say that it does carry some impressive resume. So what happened was we initially saw a pretty strong bounce right here when it hit that, right? You can see that. Basically, the bulls aware of that level, utilized that, bounced up, but bulls were able to manage to bring it back down, even gapped it down, but very, very quickly, bulls made sure to get the price back up. But you guys remember, if you've been watching my video this week, price getting slightly below some of these moving averages is not as important as the trajectory of the moving average. You guys remember that? So let's be fair here. Looking at my long-term moving average, what's the trajectory of it as of today? Upwards. But then my short to mid-term moving average, what's the trajectory of that today? Downwards. So what can we say about the current market sentiment? It's bullish in the long term and bearish in the short to mid-term. Does that make sense? And that's what we're dealing with. So on Friday, we gapped down. You see right here? So right now, we're dealing with another down gap. But if this gap, though, this down gap isn't filled quickly, bulls will be in trouble and bears will bring it down. And the must protect level for the bulls is 420. Because if we break below 420, if we make lower low here, things can get very hectic for the bulls for the month of March. Next gap here, you can see up gap is at 400. So as long as, I'm going to tell you right now, as long as this down gap is open right here, bears will go and explore themselves to see what it's like to eat this up gap at 400. You see what I'm saying? Let's do the gold because, gold, it's been breaking out. Do you guys remember my last update? I made this like thick red because I talked about how that will be the important level that bulls need to break above. We also talked about how this isn't a true downtrend. We got the lower high, but it's not a true downtrend. Why? Because we've been cultivating higher lows. And you're like, what does that mean? It means it is more like a basing period. We're consolidating, building that base. Just bulls are biding their time before breaking out. And we are breaking out. We broke above 179 for the first time this entire time. We got the first cultivation of higher high. Yes or no? Yes. And then to make things even worse for the bears, good for the bulls is that we fill this down gap. We fill this down gap, and only down gap that bears or bulls need to work with is this one. Well, actually, it looks like there's down gap here too. Little one right there, right? And that this down gap. So we got 3 down gaps. So this down gap is gone, right? This one's gone. That's an up gap. Well, let's just call that filled, right? So you can see, and I can put this up here, and then there's a little up gap that just opened up on Friday, right? So that was that crucial swing high that bears need to defend. And with that, we're breaking out, pretty much going vertical here. So there's been, I think, a lot of anticipation, with that base. And we're seeing actually a clean, pretty clean breakout. We're not seeing, I don't know, it might still happen, but we're not seeing like the, kind of like that, like shenanigan before it goes up. We just actually been, getting, we made higher lows. And then here, once we broke below, above that falling resistance, we've been talking about this resistance for entire 2021, that bulls need to break above it. Not only break above that, but we need to stay above it and then get above this peak right here. And we did that. So right now, looking really good for the gold market. Looks like it's ready to make new all-time highs. Looks like it's going to establish an uptrend. But keep in mind though, straight up move does not establish a uptrend. What do we need? We need higher lows. So always, if you're a long-term investor on things, you must learn to embrace pullbacks, because trend cannot be established without that pullback. We need that proper pullback to kind of cultivate that higher low and higher high to establish the more rigid uptrend, right? Bitcoin came right back in, and you can see we talked about the moving average right here, right? The mid-term moving average. It is not a coincidence. It is not a mistake. It is not an accident. It's not a random occurrence. That you can see how the lower highs plays out. The moving average continue to act as a resistance, right? We got that uptrend support here in the primary term, right? That's a level to hold. If we lose this level, things are going to really be really hectic, especially a lot of people are going to be looking at this potentially double top or some sort, right? So this is the level. But however, we got some of these gaps right here. We got this up gap, this up gap. These two up gaps will provide certain support. I think right here though, these are kind of some of these levels. If I kind of zoom out a little bit, actually, let's do this. Yeah, you can see that's a prior peak. So some of these levels are going to act. So we got plenty of support here though. The gap area, and then it's like prior peaks, potential pivotal levels. But the problem is, by the time this thing actually get down there, I wonder if this is gonna be already kind of quite heavy, and then panic settles in and people start exiting, right? And so this is kind of a crucial level if you're want Bitcoin to go higher to hold. It's probably about 26 or some grayscale Bitcoin. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and good trading next week.